A crypto exchange just got a banking license. And every bank executive in America just lost sleep. Here's the thing nobody's talking about. While everyone was distracted by Bitcoin's price swings, Kraken quietly became the first crypto company to receive a special purpose depository institution charter. In Wyoming. A state that most people forget exists. But here's why that matters more than any ETF approval. This isn't just about crypto anymore. This is about who controls your money. And by the end of this video, you'll understand why traditional banks are about to fight for their survival. But first, let me show you exactly what Kraken just pulled off. Kraken Bank isn't like any bank you've used. No FDIC insurance. No Federal Reserve backstop. No fractional reserve lending. What, no FDIC? Before you click away thinking this is insane, understand something. Traditional banks only keep about 10% of your deposits on hand. The rest. Loaned out, invested, sometimes gambled. Remember 2008? Yeah. Kraken Bank operates on full reserve. Every dollar you deposit, they hold it. I love it. 100%. That alone should make you question everything you thought you knew about where your money actually sits right now. Now here's where it gets interesting. And honestly, a little scary for the establishment. Wyoming created this special banking charter specifically for digital assets. They saw what was coming. While the SEC plays whack-a-mole with crypto companies, Wyoming said, "We'll build the framework ourselves." Kraken walked through that door first. But they won't be last. There's a list of companies watching this experiment very closely. And I'll reveal who's next in line in a moment. But first, you need to understand what services Kraken Bank can actually offer. Because this is where traditional finance starts sweating. Kraken Bank can custody digital assets for individuals and businesses. They can facilitate payments between crypto and fiat. They can offer debit cards funded directly by your crypto holdings. No middleman conversion. No waiting 3 to 5 business days like it's 1995. Instant. They're essentially building a bridge between two financial worlds that were never supposed to connect. And the tolls? Way cheaper than what banks charge you. Think about wire transfer fees. International transaction costs. Overdraft charges. All of that extraction? Straight in. But here's the part that keeps bank CEOs up at night. Interest rates. Traditional banks borrow your money, pay you 0.01%, then lend it out at 7%. That spread. That's their business model. That's how they afford those marble lobbies and executive bonuses. Kraken doesn't need that model. They don't lend your deposits. So where does value come from? Transaction fees, yes. But also staking rewards. Yield generation in DeFi. Actual value creation, not just skimming. This is where I need to give you a reality check though. Because this isn't all sunshine and revolutionary finance. The risks are real. No FDIC means if Kraken Bank fails, your deposits aren't guaranteed by the government. You're trusting the company, not a federal safety net. Crypto volatility is still crypto volatility. If you're holding Bitcoin in Kraken Bank and it drops 50% overnight, nobody's bailing you out. And regulation? It's coming. The federal government isn't going to watch Wyoming build a parallel financial system without eventually stepping in. The question is whether they'll embrace it or try to crush it. History suggests they'll try crushing first. But here's what the banks don't want you to realize. Competition changes everything. Even if you never use Kraken Bank, its existence forces traditional banks to improve. Lower fees. Better rates. Faster transfers. We've already seen this with Venmo and Zelle. Banks didn't innovate because they wanted to. They innovated because they had to. Kraken Bank is the next evolution of that pressure. And it's not alone. Avanti Bank got the same Wyoming charter. Custodia, formerly Avant-Garde, is fighting for one. Anchorage has federal approval. The dominoes are falling. By 2025, I predict at least 5 major crypto companies will have banking licenses. What does this mean for your money right now? It is the actionable part. Don't move everything to crypto banks tomorrow. That's reckless. But start educating yourself on these alternatives. Open a Kraken account if you haven't. Not to go all in, but to understand the interface, the experience, the fees. Compare it to your current bank. Actually look at what you're paying. Most people have no idea how much their bank extracts from them annually. And position a small percentage of your portfolio in this ecosystem. Not as a gamble. As a hedge against a financial system that's clearly evolving. The people who understood internet banking in 1999 didn't become rich overnight. But they weren't caught off guard either. Let me leave you with this. The banking system we have was built for a world without internet. Without smartphones. Without global instant communication. It's a horse and buggy trying to compete with a Tesla. Kraken Bank isn't perfect. It's not for everyone. But it represents something powerful. Choice. For the first time in modern history, you can choose to exit the traditional banking system without going full survivalist with gold coins buried in your backyard. That optionality is worth understanding. Worth preparing for. Because when the next financial crisis hits, and it will, the people with alternatives will have power. The people locked into one system will have fear. The question isn't whether banking will change. It's whether you'll be ready when it does. If this opened your eyes, hit subscribe. We're tracking every move in this financial revolution. And next week, I'm revealing the 3 crypto banks most likely to challenge Chase and Bank of America directly. You don't want to miss that. Stay unbanked. Stay ahead.